Morning all. How are you doing? Sorry. Just having a confused.com moment. Have the clocks changed? They have. I didn't realise that. Okay. That's a problem. I didn't realise the clocks had changed. When did that happen? I didn't see that on the calendar. Oh well. Okay, so my brokers basically changed their time. So I'm not going to be trading ORBs this morning on SIH because the clocks are an hour out. I'm going to have to change that for tomorrow, which is very annoying. Normal ORB will work, but yeah, that won't. Didn't check that this morning. I've been doing other things. Morning, Paul. Morning, Sol. Morning, Robert. Morning, Silky. Morning, Dennis. Great Phil. Virginia. Elevated. Barry. Peter. Ace. God, there's a lot of people here this morning. WDS. The US only clock change as far as I know. Yeah, that's the problem. When do our clocks change then? Because we normally change around about the same time. Not until March the 30th. Blimey. There's normally only a week between the two, isn't there? Anyway, yeah, so obviously if you're trading with ORB or SIH or anything that is time related, different brokers do different things. This is the part of the problem with this clock change thing, and I wish we'd just get rid of it. We don't need it anymore. It's for people that used to like light candles in the streets in Victorian times. We don't do that anymore. We haven't done it for quite a while. We don't need to shift the time. But anyway, that's another story. So yeah, basically, depending on your broker, some of your brokers will have their changed clocks changed. So this used to be 10 a.m. the open. Now it's 11 a.m. on the chart. Some brokers will be the same. Some brokers may have gone backwards. Don't know. They shouldn't have gone backwards, but yeah, just check that. So need to change that for this afternoon. So the open this afternoon is going to be 15:30, not 14:30 on broker chart time. It's a pain in the arse when they do this. I hate it. Anyway, they have. So ORBs this morning to try and figure out what would have happened. That's your 5-minute ORB. That's your pre-market. So if you took the pre-market today, if you had been awake and 52, yeah, so you'd be short the DAX on a clean break, and you would be roughly 1.5 R. On the FTSE, pre-market, you are short. 5-minute ORBs, you're also short. So they're clean breaks short today. I'm going to need to change my clocks, unfortunately. However, this version is trading anyway. Unfortunately, there's no trade on the DAX. That's annoying. But anyway, we'll see. Right. So let me just quickly check what this one's doing. So this is up. That's good. We've got 400 open P&L. Okay. Right. There we go. Sorry, a bit out. Not very organised this morning. Usually 2 weeks. Yeah, it varies. It's 1 week or 2 weeks, depending on, because I don't know. Is it always 2 weeks? I do it so rarely. I've only been at automated trading opens for the last sort of couple of years, so it's only happened 3 times. Anyway, US clocks change, yeah. UK clocks on the 29th. Yes, morning Heffron. It's now it's like 3 weeks. I know, this is the thing. I was convinced it was 1 week. 1 week or 2 weeks, depending on whether it's spring forward and fall back. But this is 1 week, 2 weeks, 3 weeks. So this time it's 3 weeks, not 2 weeks. I've never known it be 3 weeks before. Is it? I don't know. World has changed in the last couple of weeks, hasn't it? So maybe Trump has signed an executive order, actually, to change the clocks a week earlier than normal. I don't know. Anyway, this is stuff you have to pay attention to, which I clearly haven't paid attention to this weekend. I've been busy doing other things, jet washing my patio being one of them. Australia and New Zealand also change another week after. This is all out of sync, isn't it? Anyway, it's happened, so check your broker. Right, so news this week. Going back to normal. Right, news this week. We haven't got any. It's really light week for news. Not that news really matters at the moment because it's all about what Trump says, isn't it? But anyway, no news today. Flat. Tomorrow we've got jolts. Doesn't really tend to do much. We've got Lagarde speaking on Wednesday morning. The main news this week is the CPI figures for the US, which comes out on Wednesday. But then we've got the Canada rate as well, 2.75. So Canada dropping their rates as well. So, oh, sorry, one sec. I just noticed I've made a boo-boo here. All right, just got trade running, which I need to close out because it's just profitable. Yeah, so we got the CPI, which is due on Wednesday afternoon. The numbers are expected to come down. So we're expecting the CPI figures to be dropping. If you go back and remember what's happened to PMI, which was last week, or was it the week before? No, last week. Yeah, the PMI numbers were elevated, quite elevated. Yeah. So your manufacturing PMIs came out roughly where they were meant to be. The final manufacturing PMIs were up. The services PMIs were also up. PMIs feed into CPIs. So the PMI figures we were expecting to drop. They didn't. They went up. So if the Purchasing Managers Index figures were meant to drop and they went up, it leads to Consumer Price Index meant to be dropping, potentially also going up. So this is potentially bullish US. We know that inflation is sticky at the minute. They're struggling to get it down to 2% target. We've been dropping interest rates, and the rate of drop seems to be slowing dramatically because this is not getting to where we want it to be. So if this is up this week, we are going to get a rally on that US dollar. However, obviously, this is all completely irrelevant. And if you go back and look at the news from last week, we had Powell saying basically as such last week somewhere. Where are we? Back here somewhere anyway. But Powell was basically saying that there's the Fed doesn't really know what to do. Basically, was the upshot of it, or was it Kruger? It might have been Kruger. Yeah, here we go. It was Kugler, not Powell. It's possible that we'll see more persistent inflation due to policies. The reason to believe that potentially there could be more persistent inflation, blah, blah, blah. And this is all basically to do with the tariffs. Yeah. So Trump is putting the prices of everything up in the UK. So anything imported, anything exported, anything that goes on basically to do with import export for any business in the United States is going up. Therefore, the consumer price index will rise. Therefore, inflation, which is the consumer price index going up, leads to higher interest rates because they need to control spending, which makes everybody poorer. Make America great again? No, you're doing the absolute opposite. Not sure why. Basically lying about his pledges. I don't know what he's doing, but what he's doing is not driving that dollar where it needs to go. So this week's going to be quite an interesting one because this is what drives, or has in the past, before this new world order that Trump's introduced came in, this is what drives Forex markets. Inflation, interest rates, economics, basically. Economics, as admitted by the Fed now, really don't come into it, do they? Because if somebody has control of business expenditure by literally saying something on Twitter at the moment, you cannot forecast what you're going to do with interest rates next week, let alone next quarter. So there is no way to predict stability in any US economy at the moment. Therefore, no interest rates, no inflation figures can be predicted either. So there's a high probability these will bounce. The question is, are they going to drive the US up, which would normally happen in that case, or are they not because they have no faith in the US dollar because Trump is destroying the economy? That's the question. So it's going to be an interesting one on Wednesday. Nothing is driving anything in any way, shape, or form like we've had in the last decade at the moment. So news, although it is going to add volatility to the market, we've seen volatility in the last week with no news, which is off the charts, haven't we? So we'll wait and see. But that is the main news coming up Wednesday. And then obviously in the afternoon, we've got the Canadian interest rates. Again, Bank of Canada, really, this press conference will be very interesting as to what they say there, as to whether or not they think inflation is going to be affected. Because, they've got tariffs on them already. They've had to reciprocate with further tariffs. And then there's threats of more tariffs coming in on April. So, again, you are not going to be able to predict what this is going to be this time round. We've got a new president in as well, who happens to be Mark Carney, who happens to be the former head of the Bank of England, who is obviously very up on finance. So whether or not they decide to do this on Wednesday, we don't know. And obviously what's going to happen with inflation for Canada as well, very difficult to tell. So US and Canada, Wednesday, going to be a very interesting day. I should imagine a little bit of a bloodbath for some people. We've got the PPI figures coming out. That's the producer price index. That comes out on Thursday. Again, the producer price index feeds into the consumer price index. Anything that is produced is bought. Anything that is consumed, consumer price index. So manufacturing and so PPI, purchaser's price index, etc., all feeds into this. Again, forecast to come down. If that goes up, you can bet your bottom dollar that's going up as well. But whether that going up now affects the dollar positively, as it should do, as it has in the past, historically, we don't know. So these are all going to be kind of first this week. GDP for the pound, that will probably affect the pound properly. But obviously GDP forecasts are going to be very difficult for the future. But month on month, we're expecting GDP to have dropped. So we could see a nice pop on the pound on Friday. And then we've got Michigan. And Michigan moves the market. So we'll see what happens on Friday. But at the end of the day, none of this means anything. And if Trump decides to open his mouth, this is the most important thing at the moment. That. So over the weekend, news-wise, wasn't an awful lot. It was all fairly quiet from a Trump perspective. No real movement on Ukraine, as promised. He's basically beating his chest about all of this, but not doing anything. So, yeah, not an awful lot, really, to report over the weekend. So that's pretty much it. There's no real, as far as I know, tariff things going to happen this week that are planned. That doesn't mean they won't happen, obviously. There's just none that are actually planned to happen. So it's a case of just sitting around and waiting, really. But there you go. That's your news done. Well done if you did manage to change your clocks. You did get on the ORBs. You're at pretty much target. TP, where are we? 5, 10, 15. So that's the open, 5, 10, 15. So your DAX ORB is 52, so you need 150 for a 3R. You're at 140. So the 3R break clean on the DAX. If you take the profit now, I would. Well, I don't know. Leave it if you want. Up to you. Short there. So your 5-minute pre-market was 22. That's within range. So you'd be short there as well. So you needed 66. Your 1.5 hour on the FTSE. So the FTSE not quite as clean. That's TP1 hit on the DAX. Just going to change these quickly now while I remember. Let me just save those as DAX. DAX. I've got a 1 hour shift set already. I'll do this later. Can't be bothered now. There you go. So TP hit on the DAX. Yeah. So these are the ORBs basically. So yeah, nice clean breaks both today. Money in the bank. Right. There you go. There's your ORBs done. So I just need to just target on this. So let's have a look at the FX market. So obviously last week was an absolute bloodbath. Everybody knows that. We've had this huge move on the euro, which, yeah, I mean, it's just, again, that horrible word, unprecedented. Absolute parabolic move on the euro. So we've got a lovely reversal gone in this morning. This is kind of absolute textbook M pattern reversal. So lower high, lower low, M pattern reversal. Reversal alert is in. So the task today for the euro pairs is to break support. So we've just about hit ADR on euro odd. Euro New Zealand has hit ADR. So we've got, there you go, there's your ADR hit. So there's your M pattern reversal. Again, your reversal alert in. So this area here, which is on Wednesday last week, we started to see some weakness creeping in on the euro. And we started to see some small reversals starting to happen. Thursday, they didn't hold. And obviously Friday, we had that big spike through again. So this area here is where we were starting to find exhaustion. And then Friday, we had a new rally starting. Now, this is either an exhaustion rally, or which will be a continuation move, or, it's an exhaustion rally, which will be a reversal and a profit take, or it isn't. And it is the next leg starting, and we should find these propulsion gaps here, or these highs acting then as support for the next leg up. So we'll have to just wait and see what happens today. We're at ADR already. Market's only been open for 20 minutes-ish. As you can see, Asia sold off very nicely on that one. It's not really that strong. The Aussie's not that strong. The New Zealand dollar in the last 2 hours or so has been fairly strong, which is obviously the end of Asian session. So this is more, I think, potentially what London is looking to do today. So again, M pattern reversals in absolutely everywhere on these euro pairs, and we're looking for the profit take move on that leg. So today, tomorrow, could be completely unwound at least 50% of this move. Yeah. So when these profit take legs start to work out, if there is no desire to continue the buy, they will come down very, very quick. So within the next 24 hours, you could easily see reversals on these. So just bear that in mind if you're trading ADR reversals, when you're seeing these ADRs lighting up to the downside. This is quite possibly a very good entry. So if we look at the Euro New Zealand right now, yeah, it's an ADR reversal, and potentially this is exactly where you want to start looking for a long, if we are going to just flag break and continue. However, if this is a profit take, you're going to need to be ready to be in this for days, scaling into your ADR. So just bear in mind what is happening at the moment. When you get ADR hits to the downside after a move like this, it is or it isn't. But if it isn't, you know you're going to be in this for days. So just bear that in mind. If you look at all these on weekly charts and daily charts, yeah, these parabolic runs, we're looking basically for either that, or we're looking for a profit take leg. And the profit take leg is easily got 50% on it, easy. If not, an A-shaped recovery. You know, we don't know what the hell is causing this at the minute. We know what's causing it. It's options purchases and investment in the euro. But why invest in a country that's got to up its defence budget, spend an absolute fortune? Yes, they're going to sell a lot of bonds, but they haven't done that yet. So you're preempting bond purchases, which may not come. So this very easily could reverse. Tariff drops by Trump will immediately reverse this, because relationships will be rebuilt and trade will start to flow again. And that's just going to carry on doing what it's doing, which is dropping on the interest rates. So we'll have to wait and see. If you look at the euro pairs long term, the euro is not strong. It's sideways to bearish. It's not really that bearish, is it? But it's not strong, the euro, basically, because they've been dropping interest rates dramatically. But then so is everybody else. So this move here, obviously, is quite possibly that Yeah, it's going to take one utter from Trump, and that will be back down again. So daily RSI extension again. Yeah, so we're up at these highs. Yeah, when we get up to these levels, it's not often that you don't have that pullback and reversal starting. Question is it going to be a leg back up again, or is it going to be continuation down? So we'll have to wait and see. But either way, it is underway. So we'll see what happens. But Euro New Zealand is obviously an extension. Pound New Zealand is also extended to the downside. So lovely M pattern reversal coming in here. So you've got basically a multi-week M here, potentially, back down into this area. Yeah. Or if you're looking at it on a shorter term basis, this is a multi-day M pattern from Friday to Monday. And this is where you'll be looking to put in a new higher low if we're bullish market structure. Yeah, so this is either a long-term profit take underway, or it's a short-term pullback continuation. One of those two. If we knew that, we'd know what to do, but we don't. So you either took that reversal alert if you were looking for a flag break long, or you're taking this reversal alert if you're looking for an M pattern reversal, one or the other. So yeah, they're both valid ADR reversals today. However, we've got to wait until this afternoon, basically. As soon as the afternoon session comes, Trump's awake. As soon as Trump's awake, Trump's talking. Who knows? RSI dashboard is flat. So there's nothing to look at on RSIs because all the RSI extensions and embedded moves that we had from last week are undoing themselves. So everything that was extended and embedded obviously is now reset. Therefore, everything is flat. However, we have not pulled back properly yet. So, what we're looking for is a drop down on RSI during this profit take move. And then we'll see if we can get some long positions on those then. But yeah, so I've just realized I fell foul of my licensing system this morning. So I basically logged into another account on this terminal this morning, and I forgot to license myself. So it flashed up and said, you haven't got a license from my own product. There you go. So it definitely works. The licensing system, that is. But I've just realized I've turned off the swap filter because I had to reload my settings. So yeah, swaps basically, obviously on these euro pairs, it's quite expensive to go long euro at the minute on most of them. Euro Swiss is good, but all the other euro pairs, you're looking at like $7 to $10 holds on a contract. So, these should be short. Yeah, interest rates should be short. Yeah, the market should be shorting it, and it has been for the last year. But obviously, this is not because of interest rates. This is because of Trump. So, we'll see. So anyway, we'll have a watch of these this week. If we can hold anywhere down here today, I think we've got a very good chance tomorrow of just an M pattern retest and drop. Because the market, if we don't bounce today out of this, I think the market's going to see this as the start of the profit take, and tomorrow we're just going to get more selling coming in. So, however, we've got no news catalysts to drive any movement. So it is literally a case of reliant on market structure and market movements come in today. And anything Trump says, basically. But he's got to say something positive about the dollar. He's got to come out with something positive to drop these. So we're reliant on the Orange Wonder at the minute. Not a lot we can do, unfortunately. Right. So looking through the pairs. Let me just catch up on chat. Trump is actually discussing to get rid of the daylight savings clocks. Yeah. Now, if he's going to do something positive, that would be it. Everybody, just scrap it. We don't need it anymore. We really don't need it. Yes, it's nice to have an extra hour of sunlight for what? A week, maybe 2 a year? Or we could just have normality and not have to muck about. From a trader's perspective, there's no trader on the planet right now that isn't saying scrap it. Everybody that gets up in the morning really early, like postmen and milkmen, they're saying, we love it. Yeah. But they're a minority. There's more traders than postmen, I'm sure. Morning, Chris. Morning. Was check. Trump, he will generate a lot of cash from tariffs and use it to reduce tax. No, he won't generate. This is the thing. I don't know where he's getting this from. He will generate a lot of cash from tariffs. No, he won't. Because if he puts a 25% tariff on someone, they put a 25% tariff back. America is one of the largest importers in the world. They import more stuff from everywhere, from China, from everywhere. Yeah? Go and look at the cars on the roads in America. Half of them are American, half of them are European. 25% more on your cars? You're not buying Teslas anymore, are you? No one's buying Teslas anymore. It's not gonna. It doesn't work that way, unfortunately. And this is the bit. This is the thing. I reckon there's something else going on underneath. Yeah, and I posted it in the Discord last week. There's a conspiracy theory going around at the moment that basically what Trump's doing is deliberately crashing the stock market so that all of his rich billionaire mates can buy up stock cheap, and then he's going to turn around and drop all the tariffs. The stock market is going to make all-time highs, and they are going to make more billions. Logical? Does he give a monkeys? No, it's all about money, isn't it? If he's running it like a business, what do you want to do? Make money. What's the easiest way to make money? Crash the stock market, buy up all the stocks that everybody's selling at a really cheap rate, and then rally the crap out of it. Good one. Why not? What are they going to do? Boot him out? Oh, well, never mind. He'll be booted out with another 20 billion in his pocket, won't he? Who gives a monkeys? Well, he doesn't, obviously. Morning, Mark. Morning, outro. How far are your trades spaced apart from Euro odd? Don't know. 70. About half an ADR, 3/4 an ADR. These four here are five rather are roughly half an ADR ish. These two are probably an ADR, I would say. 200. So 1.5 ADR between those two. And there was an aggressive drawdown control position there taken, which obviously is taken off because it didn't work. So had an aggressive DD control taken here on Friday, but obviously it rallied straight through and stopped out. So, but that aggressive drawdown control position on obviously has brought the average back. So I need literally half an ADR more movement today, and this is a break-even exit if I want it. I don't think I'm going to take it. The thing is, with this one specifically with Euro odd, we've got this 2-day accumulation, and then we've got this propulsion move here. If this propulsion move is the exhaustion, and they do not rebuy this, and you know, there's a high probability it is going to bounce from here because there's going to be buyers here, but it's whether or not this is the exhaustion point and the seller's taking back control. If that is the case, we're just going to retest the reversal alert and we're going to sell back out of this area straight down. And if we can get down into here where Y would be a break even at some point today, so only looking for 150 ADR, which in the grand scheme of things over the last week, 150 ADR is pretty much the norm now, isn't it? If we can get there and hold in that accumulation, I get the feeling that we will just sell off straight away tomorrow, in which case then we're coming back down into here. That's a good ADR and a half drop. But, you know, it's down to the megaphone, isn't it? And what he says. Morning, FTNet. We'll have to wait and see. Morning, Mumo, Nav, Harold. Sure you know what you're doing? What do you mean? What was I talking about when you said that? I don't know what I was talking about at the time. Right. So I'm going to whiz through all the pairs today. The Zone Trader account, that one blew on Friday. So that one's gone, unfortunately. I got stopped out on the Zone Trader account. It was a margin call, actually. One of the reasons is, which I didn't think, that was running on a cent account. The problem with a cent account is you only get 300 to 1 leverage, not 500. So it got margin called with more than 10% left in the bank. And basically the margin call happened here, literally there. If you look at, I don't think I've got it on here, but the Euro New Zealand exit was here. Yeah. It's always the way. The very, very last exit on any position trade is the one it reverses on. It, like clockwork. I've said it in there. I've said it in here many times. As soon as I get out, it goes. Always the way. So yeah, basically, obviously all these reversals are now underway, but not a lot I could do with that account, unfortunately. It was a little bit too over leveraged on the euro, and obviously this euro squeeze is a little bit bigger than normal. It must be a jibe from a certain discussion on Discord. Oh, okay. Yeah. Yes. Yeah, I don't know who that guy is, but basically telling me I don't know what I'm doing in futures. He's seen me trade futures many times in here, and obviously don't know what I'm doing. Okay, let me just clarify. Futures is not this. I don't trade futures for a start. If you're watching, whoever you are, I've forgotten your name, but anyway, he's seen me trade futures in here many times. He obviously doesn't even know what futures are, because I don't trade the futures market, do I? This isn't shit. This is Forex. This isn't futures. This is CFD index trading. It's a totally different thing. Don't know what I'm doing. Anyway, yeah, this is one of the reasons I basically give up every year. I go, screw it. I can't be asked anymore, because as soon as one thing goes wrong, doesn't matter how many people you make 6 figures a year, when one thing goes wrong, everybody hates you. I can't be asked. I just ban them. Go. Bye. Can't be bothered with you anymore. Anyway. Right, so we're going to go through all the FX pairs this morning and have a look where everything is. Look for levels, etc., and see if we can squeeze some money out of all these reversals, basically. So this is the RSI extension account. It's currently down 10%, mainly because of drawdown control on Friday. So obviously this, the way I've got this set up is quite restrictive. So this will only allow 6 positions at a time. So this never goes into more than 6 trades. When it gets to 6 trades, it does automatic drawdown control. So this has taken some hits, obviously. Last week, it took an 11% loss because it had to do DD control on these euro positions. So obviously quite a lot of exposure on the euro. We'll look through all of these, specifically the euro pairs, but all of these, most of these, have got aggressive drawdown control on at the moment, and that's why that loss is there, because, as you can see from this one, we're doing now aggressive drawdown control. So it's doing drawdown control automatically on the oldest positions to keep the average close, and it's doing aggressive drawdown control to try and time this top as best we can, so that we can get the profit in very, very quick. So basically, from the idea behind aggressive drawdown control, and obviously drawdown control in general, is drawdown control, as you can see on that position and that position there. This was position 1 and position 2. When we get up to 6 positions in, as soon as that 6th position is taken, position 1 is removed, and that is taken as 100% loss. As soon as we get into the next position, which in that case was position 7, that one is taken as 100% loss. So, and when we get our percentage over a certain level, we start aggressive drawdown control, which starts taking larger size trades. This one isn't doing aggressive drawdown control at the moment, but the aggressive drawdown control, Euro odd, is doing aggressive. That's interesting. So that did take one there. Oh, that was a manual I took. That's why. There we go. So Euro odd, that's an aggressive drawdown control trade. So we got 2 losses there, and we got another one there, 3 losses. And then we've got an aggressive going on there. And the aggressives obviously use a stop loss. So the aggressive drawdown control position is out. That's done. It's always going to be around about 1 to 1.5% loss on an aggressive drawdown control position. So what you're doing is basically reverting back to stop loss based strategy, which is what that guy was going on about. Don't get it. you're doing position trading, not using stop losses, and then when it's not going well, you use stop losses. Why not use stop losses in the first place? Because you're an idiot, you haven't watched the boot camp, and you haven't watched any of the videos. You've just stuck an EA on the chart and expected it to print money. Doesn't do that. Anyway, so, sorry, that was a good impression, wasn't it? I don't know what he sounds like, but anyway, that's my impression in my head. So we've got aggressive drawdown control on. The whole idea of the aggressive drawdown control is to get the average as close as possible to price, so that we need a 1 ADR push to exit the position. So these ones that go into drawdown gradually and grind away, the idea is as soon as the move starts, you're looking at somewhere between 1 to 2 ADR profit takes. Yeah, climb the stairs, fall down the elevator shaft. That fall needs to get us out, and ideally get us out in a nice profit. So the profit that will be gained by a 1 ADR move beyond the average here will pay for all drawdown control that's been done on this instrument. So this has made a 9, 10, 11% loss. This profit take move will generate way more than 9 or 10% because of the lot sizing that we have on. So it's a loss recovery system. That's what drawdown control and aggressive drawdown control is. It's aggressive loss recovery. However, if it doesn't work out, it then will start to continue to take those losses. So at some point, you have to go cut it. So what I tend to do with my trades is when we've pushed up, if we flag break and run, I then tend to cut. And it's usually around about a 9%, 10%, 11% loss in total for the instrument. That's what I tend to look at. And that's why the Position Trader EA's got that setting in there. For cutting basically your losses. There. So close all trades at max DD target. Yeah. So if you set that to true and then set that to 10%, if the total drawdown on this one instrument alone reaches that number, it just goes out. Yeah, we've had it. This is wrong. Totally wrong. Because there are instances where you get extensions on RSI that are not going to be the top of a leg that is a profit take. So there isn't one on here, obviously, because I want to use it as an example. There. So that's didn't really move far, but so here we got that big extension. I mean, that did pull back, not enough to get you out. And then obviously it rallied. But this is a bad example because this is obviously just ridiculously parabolic. But normally you get a move up. And then when the RSI extension comes in, what you get is a flag. And then you get a new push. So that flag resets RSI. And then RSI pushes for a second time. And that second RSI extension, that is the one where you get the profit take move. Yeah. So you basically, if you get to this point there and it breaks and that hasn't given you an exit, your choice is to either ride the second leg and then take that, if you can, if you've got enough, available drawdown to do it, or you have to just scrap it somewhere in here. And it tends to be around here that you scrap that trade at your max drawdown, and then bang, that's what tends to happen, because it will, if it doesn't profit take on the first leg, I mean, there are odd instances where you'll get 3, but very, very, very rare, very rare. I mean, it just doesn't happen really. Yeah. If the market is squeezed that far and it manages to put a third leg in, something is wrong and you want to be out. That's what that's about, cutting it. You're totally wrong, and the market has shifted while you've been wrong, therefore you get out. Aussie New Zealand's a great example. That's a good example because I was in it. I'll have to go back. Is it that far back? Yeah, it is. Blimey, that is a long way. Yeah, so here is an example of 3 legs. So entry here, you would have been out on that. If you weren't out on that, yeah, because that, if let's say, for example, you got in up here, that's not enough to get you out. With aggressive drawdown control, that would be enough to get you out, but with normal positioning, it wouldn't be. Then you get your second leg down. normally what then would happen if they don't do the profit take there, they will do the profit take on the second leg. Yeah, so you get the 50% retracement. This is an example of a double flag break. Yeah, that is something you don't find very often. Usually you've got a profit takeoff of the second leg, but these are the ones where you would be going, I'm out, done, 10%, can't do it. Because if that does go and continue, that's your account gone. You won't be able to survive it. So you have to pull the plug at some point. Anyway, but I have covered all that before. So there we go. So we're going to whiz through all the pairs individually, have a look at where everything is, have a look at levels that are coming up. That specifically this morning, I wanted to look at levels for drawdown control. So anything that you're in at the moment that is squeezing, it's looking at those areas where you can get those bigger trades on, which are likely to work out because you've got resistance and support, which is going to help you along the way. Well, he has to have some balls to take you on, take you to the fight. I don't mind fighting. I'm not fighting with anybody. I can't win, basically. The situation you're in whenever you put yourself in the public eye is you're right all the time. No one ever says thank you. No one ever says, that's brilliant. Well done. You're brilliant. Excellent. My God, you've made so much money. As soon as one thing goes wrong, that's the only time you ever hear about it. Yeah. And I've given up. I've got thick skin now and I can't be bothered. I just basically shut it down and say, piss off. Not interested. Go and read the manual, watch the boot camp. You take the trades. If you copy what I do, you're an idiot, basically. Don't copy people because people get stuff wrong. I've just blown an account. First one in 5 years. Sorry about that if you followed me, but don't follow me. Do it yourself. Use your own nonce. Use your own willpower, your own skill, your own intuition. If you haven't got it, McDonald's are hiring. Yeah, I tell it like it is. You either can or you can't. And if you can't, off you go. System hop. That's the best thing to do. Keep doing it. You should start a prop firm that's suitable for position trading. There's no point. Prop firm's business model is place restrictions so that people fail evaluations and blow accounts. Yeah. How would you do that with a position trading account? This is the first, that zone trader account is the first account I've blown in 5 years. So what I'm saying is I get an evaluation fee from everybody once every 5 years. That's not a good business model, is it? It's not going to work. Got to hand it to you. You've got thick skin taking such unnecessary. Oh, I'd give up. Are these 10% max DD in your example based on equity or balance? Balance. Everything in the EA is based on balance. So it works in the same way as the dashboard. So everything in here is working on balance. Yeah. So this is this drawdown is relative to current balance. Current balance. Yeah. So if you started with a 10K account and you've traded it up to 25K, for example, it will be 2.5K. Yeah. It would have been 1K back there, but your risk is based on your account balance. So your lot sizing is automatically calculated on the account balance. Therefore, your P&L and everything else has to be done on your account balance because you're not going to be using the same risk. If you are using in the EA a fixed risk, yeah. So if you're using a fixed lot size or a money amount, yeah, that doesn't change. Percentage risk does. Yeah. Most people use percentage risk because as your account grows, you risk more to make more. That's the idea. But you don't have to do it that way. So again, it's discretion. You know, this is, I can't say it enough. There is no way to set something on a chart and just print money. It doesn't work that way. That's not how these markets work. You have to have some discretion in there. You have to look at things with your perspective. Everybody's perspective is going to be different based on how their week, month is going, how many systems and strategies they're running, how many accounts they've got. Yeah. If you blow an account and you lose X amount of thousands of pounds, is it a problem? It is if it's your only account. If you've got other accounts making you revenue in other strategies, it's not a problem. It's just a pain in the ass. So everybody's got to be different. There's no one size fits all in trading. There's many ways to do it, many ways to make money. There's no right or wrong. It's just different. Again, I say this all the time. Hopefully for some people, it's sinking in. I asked AI on tariffs, top 5 items between US and Europe, and it said US importers likely pay more in total tariff costs, 81 billion versus EU's 37 billion. Yeah. So this is the thing. This is the bit I don't get, and I don't think most economists get. Tariffs, yes, if they're beneficial. If they are not beneficial, no, not blanket tariffs. And this is where I think he's going wrong. He's blanket tariffing everybody, right? So he's basically saying to Canada, 25% on you, and Mexico, 25% on you. Why? Because of fentanyl, right? You don't import fentanyl, Trump. So why are you penalizing every business in the US that does not use fentanyl for illegal fentanyl imports? Basically drug dealing. So he's basically penalizing Canada, Mexico, and the US because he has a problem with border control and he can't control the flow of drugs into his country. I tell you what, let's just destroy the whole economy of the world because I can't control drug flow over my borders. Build your bloody wall. It's not hard, is it? You've done half of it and then you gave up. Oh, sorry, you got kicked out. But anyway, either way, you did half of it. Finish the bloody thing off. Stick a load of automated gun turrets on the border if you want to. If you want to really stop it, you can stop it. But destroying the world economy and the world order just because you've got a drug problem isn't the way forward. It's harming you more than everybody else. We can survive without you, US. Look at Tesla. 43% drop in sales in Europe. You've just made your best mate bankrupt. Good one. We don't mind that one. Although we do want to go to Mars. So if you could just keep SpaceX running, screw Tesla, but keep SpaceX going. And the Starlink satellites are pretty handy as well. But yeah, but we don't need your electric cars. They're crap. Bad build quality. The sunroofs keep popping out and the dashboard keeps rattling. Anyway, that's the feedback I've got from people that I know that have got them. For this investing strategy on S&P 500, is it still safe to use 0.01 lot per 1K? You mean the S&P pullback strategy? You'd have to test that. I don't know. I haven't got a set file for the position trader EA. Well, on my list of to-dos is to get a load of set files together, and that's one of them. Again, I don't know. What you're asking me to do is predict the future. Should we use 0.01 lot per 100 per 1K on S&P pullbacks? How far is the S&P going to pull back is my question to you. Until you can answer that question, I can't tell you what the risk requirement is. So I would just say the smaller the better. Yeah. Don't forget it's an investment strategy. It's not there to make you a fortune. It's there to grow a pension fund. I can grow a pension fund 3 to 4 times faster than a pension fund can grow a pension fund by using higher risk. But that is the important part. Risk. It's higher risk. Pension funds will be as safe as houses because pension funds' business model is numbers. They want 10, 20, 30 million people investing in their pension fund. I am interested in my pension fund, therefore I'm not interested in low returns. I'm interested in better returns, so I'll risk more because I'm more confident than a pension fund because they have to be risk averse. So the best thing to do is just do a back test. Did I post the set file for the position trader EA version? No. I can't remember what it was. We'd have to go back and watch I did it in the member stream, didn't I? We'd have to go back, do a set file basically, Yeah, and do some testing with different lot sizing, and that ones you can kind of answer yourself. But all we've got to go on is prior S&P, haven't we? So annoying, so annoying. Let's just come off of previous week's low on the DAX. Look, sorry, 2-week high on the DAX. Yesterday's low. That's target hit. Frustrating. Just taking that and banking it. So yeah, you'll have to test it. So with the S&P, I haven't got the S&P there. The set file that we tested in the members stream survived that with no problem, did it? So if you go back and look at the member stream when we did this, whatever that was is safe, even during a really bad bear market. I think that was targeting, if I remember rightly, that was targeting 3 ADR, wasn't it? Yeah. So we were looking for 3 ADR pops. I can't remember what the scaling was, but the scaling I think was 1 ADR. But I don't know what the risk was. So you'll have to check yourself. But run some tests. Hang on a minute. Indices. Hold on. This is it. Look, this is it. So we were using 1% over 1 ADR. 1 ADR apart. Signal candle closing beyond 1 ADR. And a 3 ADR target. And the entry was the 4-hour 14.30. Closed below that level. So it has to be a strong drop. And then obviously we were getting in either on a reversal alert or a 3-bar reversal, not a moving average cross. So we were waiting for W pattern or 3-bar reversal pattern. That was it. And that was the one that worked really well, wasn't it? So that was producing 4R. So basically the idea, for those of you that weren't in the member stream, that don't know what the hell we're talking about, this is the strategy. This is the trend pullback strategy on the Position Trader EA, which is equivalent to the old market reversal alerts one of the S&P 500. So we're buying the dips basically in the S&P 500. It's a long only strategy. And what we're looking to do is outperform the S&P 500, which is 8% per year. This produces around about 24% per year. But it is single instrument, medium risk. But we also ran it on the DAX, good results, NASDAQ, good results, and Dow, even better results. That returned 160K. And that test was over 4 years using 30-minute charts. There you go. Hopefully that answers the question. Thank you for saying thank you, outro. Leon, I've learned more from you in the last 3 months in your private sessions than all the courses combined. That's good. That's what it's good. That's what it's all about. How is the ORB V2 getting on? Fantastically. Doing very, very, very well. Ignore that number. This account, which is really annoying, and it's something I did not know about Global Prime. They wipe your account history on a monthly basis. I didn't know that, which is really annoying. This is up over 200%. Starting balance on this was 10K, it's up to 31. We're up 200, over 200%. But they wipe your account history, which is really useful. But anyway, so yeah, but this is ORBV2 doing very, very well. This is ORBV3, which is not actually ORBV3, and it's hit target again today. This was a 30K account. It's now 58. So this strategy is secret. Not telling you. Nearly ready for release? Not yet, no. Still needs some bits and pieces doing to it. But it's not far off. Anyway, I was going to do some analysis, wasn't I? Let's have a look at the charts. Right, so I'm just going to whiz through all the pairs quickly and just see where we are levels-wise at the moment. So obviously the euro pairs are the main things we need to focus on, but I'm going to whiz through them all so we can see how each is performing. Aussie CAD. So we're not really going anywhere on this at the minute, basically because we've had a weak Australian and New Zealand dollar. We've always had a weak CAD with all the trade tariffs, so that's created this sort of price movement. Predictions going forward is impossible because we do not know what is going to happen with the Canadian dollar. We don't know what's going to happen with Trump, basically. So Trump is either going to reinforce the second batch of tariffs in April, which is going to weaken the Canadian dollar. Commodity exports at the moment are down, which is why we've had Aussie and New Zealand weakened, because anything coming into the US is costing more money. So again, every country, every currency is losing out on these trade tariffs. Every currency, basically. For some reason, the euro, as it seems to have had its ties cut completely with the US, is massively rallying. So whether that's going to continue or not, we'll have to wait and see. But at the moment, there is potential more weakness coming for the Canadian dollar in the next month, which potentially could be that sort of movement. But right now, these highs are holding. So this is a great sell area, which obviously we looked at last week. And it's selling very nicely. So we'll wait and see what happens with that one. But right now it's kind of lovely little market structure pops to the upside. So it's slightly bullish, but not very. So it's, it doesn't really matter which way you get into this. It is actually tradable in both directions. It's working out very nicely. So last longs were down there. Haven't had any more trades since that one there, basically, which gave us a nice easy 1 ADR profit. But that one, we didn't actually get an extension on that, so there was no trade taken short. Aussie dollar Swiss, lovely exit on that one. Got out a little bit too soon, but that was 1 ADR above average, so that was the exit. We've pushed up, down again, so double bottom bounce on Friday. There's your reversal alert, so lovely looking longs. That wasn't really an entry. There was an entry there if you're, depends how you've got the EA set up, and this is, this personal preference, but if you've got the EA set up on the RSI to get you in when the last close candle is beyond the RSI level, that entry wasn't valid because the signal candle, whether it would be a 3-bar reversal, a moving average cross, or a reversal alert, would have happened when it was above the line. So if you turn that to off, you would have actually got trades on that and you'd be in long now. But that looks like a lovely little opportunity for a long there. RSI extension from Friday last week. So it's very, very bearish. Obviously, at the minute, we've had a week's worth of selling. You would have got out of it all, as you can see, did get out of it all last week. But that is potentially now going to double bottom up into here. With the Swiss franc potentially will be weakening. At the moment, interest rates dropping there. Inflation is still pretty weak, so they'll be dropping that down as well. But yeah, so that looks like a lovely long right now. Yens, I'm not trading any yens personally at the moment. It's a long only for me until those interest rates in Japan come up by roughly another, I mean, realistically, 1%. We've got to get another 1% on the interest rates in Japan to make this actually look at a short. But even then, it's still going to be quite expensive. But I'm long only, and I can't long against the yen at the minute. With what's going on in the world at the moment, if Japan still has its safe haven status, which we are yet to confirm, really, you do not want to be doing sort of long plays on this, because if we do get something, murmurings of World War III or murmurings of financial crashes or anything bad, the Japanese yen and the Swiss franc are going to benefit from it. So you could get into a position where you're coming down quite hard. The other thing with the yen at the moment is, since the intervention, we haven't really had any weakness in the yen. So the intervention obviously was, the largest move in history for the Japanese yen. We did a 50% pullback, and since then it's not looked back. So longs are counter trend, obviously, and a little bit more dangerous at the moment. Doesn't mean they're not going to work, but it does mean that you may be squeezed into them for a fair amount of time. So while you're going to be paid to be in those trades, and I did take one on the pound yen a couple of weeks ago and it worked out fine, long term it's more of that. So all the yen pairs at the moment, you want to be looking for shorts. But when you're getting into these, if you do get stuck in a short, for example, like that, and you're stuck in it for 5 or 6 days, just bear in mind it's going to cost you $19 a contract to hold it, for me anyway. So not really interested in any yens at the minute. They are all getting to decent points as well, as this is holding beautifully, look. So there's a good chance it will work, but one wrong move from Trump with Russia or something like that at the moment, and this thing's coming back down again. So this pound yen is the one that I took last week there. I think I was out on Friday on it, or was it here? No, it's the week before, I think, wasn't it? And I was out here. Can't remember. It's somewhere. I was out anyway. But look how hard it is to get out. Look at the upside movement, and then look at how fast these downward movements. It's selling off a lot quicker than it's buying, basically. Again today. So Aussie New Zealand at the minute is stuck completely sideways. This usually is stuck sideways. When it takes off, though, it will just go parabolic. So it's not the best thing in the world for position trading. Not my fave at all. It's short only at the minute. So you've got a nice double monthly bottom coming up down here. And we've got these lovely highs as well for shorts. So they look good. But that's what I'd be more interested in doing when we get up there, not where we are at the moment. Aussie US, again, shorts on at the moment on this one. Can trade this in both directions. Got out the longs last week into propulsion, and it just carried on going. So shorts on at the moment, looking for that. This is going to need Trump to rally the US, though. So it's in profit at the minute, but not taking off until we get back down into propulsion targets. So got shorts, but it's not really getting to any levels, as you can see. We're just kind of flip-flopping. So just looking for an ADR of movement, basically, to get out in these ranges. Again, what's going to happen with the US? Nobody knows. CAD Swiss. So we have broken down on the CAD Swiss back into this previous anomaly back in August. So this is potentially a very good spot to start buying this. Again, Swiss franc potentially weak moving forward unless there's a safe haven run. Canadian dollar, though, at the minute with the tariffs, obviously, as you can see, the market not impressed. But then again, every single liquor company in the US, of which there are many, and they export a lot of it to Canada, are not selling any product. So if you're in the liquor business in the US, really sorry, bankruptcy is probably about 6 weeks, maybe 8 weeks away. Nothing you can do. But then again, Trump doesn't drink, does he? He doesn't care. But anyway, so yeah, no exports into Canada for anything, basically. So yeah, potentially, if those tariffs do not come on in the second wave in April, we'll see a resurgence. So if he's going to undo these, we'll be pulling back inside the range. However, if this is a range break to the downside, as it seems at the moment market structure is indicating, that's what will probably happen. So not really doing an awful lot with that either at the moment. Long opportunities, obviously. I don't think there was one on the hourly. No, haven't had one. There was one back here. Not trading any Swiss on that account, on the RSI extensions. So yeah, I'm not in that. But there was one back there which would have worked out in this case. So, and you had one from Friday which marginally may be in. But Jens, so euros. So obviously we know what's going on with the euro. This thing is off on the biggest parabolic run it's had in I don't know, it's definitely a decade. But yeah, we're waiting to see what happens next with this. I suspect if this is now the new norm for the euro and we are going bull euro, even though they're reducing interest rates, which will be, you know, completely abnormal, that's what I'm looking for, is some kind of pullback into this support, into this 50% retracement, this propulsion. If it's a flag break and the market is going to be incredibly aggressive with its buys on the euro moving forward for some reason, that's really all we're going to get, probably where roughly we are today. But a parabolic move of this size, so if you measure this move here, you're looking at 913, which is going to test my maths. 150, let's call it 369. So this is roughly 6 to 7 ADR with absolutely no profit take. We have now got a 1.25 ADR pullback. So this move we've had from here to here is 1.25 ADR. That's the biggest pullback we've had since this rally started. So you can see, obviously, in a normal scenario, if you stick a fib on this, if you're going to get a weak pullback in an uptrend, you're looking at somewhere around about the 38. So this would be around about 220 ADR to the downside from where we are right now, would be roughly, so 3 ADR pullback on a 7 ADR move. Yeah, this is normal market structure. That would be roughly where we'd be looking for a continuation long. If it's going to be a strong, medium to strong pullback, we're looking to come back into the recent highs. And if it's going to be an even stronger pullback, we're looking somewhere around here, back into this high, for a continuation. If Trump undoes everything he's done and the euro suddenly gets all of the backing we've had previously from the US, we're going to do an A-shaped recovery. I think that's very unlikely with what he's been saying. He was talking yesterday on Fox News about how Ukraine is probably just going to lose and they're going to lose their country. So it doesn't sound in any way, shape or form like he at the moment is going to help out in any way. So I suspect we will probably get continuation on the euro. But the question is whether we are going to, how far we're going to pull back before we do that, because we're already pulling back. It's happening. So ideally today, that is what I would like to see. So from an aggressive drawdown control perspective on all of these euros, if you scroll out, there is nothing to the left that you can look at to help you in any way, shape or form. So this is kind of the backup aggressive drawdown control situation, having 6 to 7 trades on, or being 6 to 7 or 8% in drawdown. There's got to be multiple ways you trigger drawdown control. Aggressive drawdown control for me should always be done at support and resistance. If you haven't got support and resistance, you can't do that. So you need another mechanism to employ it. So it's how many trades have we got on? How big is the total lot size? How large is the total drawdown on the individual instruments? That's what needs to trigger it. So you probably are already triggering aggressive drawdown control, as I have been, if you're in these. So it's a case of seeing how far we can get back. So for me, the average price here is very, very close. We're looking at 90 pips, which is about just over half an ADR. 70 pips is at half an ADR. So this pullback we've got so far underway, if I can get another half an ADR out of it, I can basically pull the plug and get out. That's not what I'm looking to do. I'm looking to recover some of the 11% that we're down. So right now, there's a 4.5 grand loss. Right now, I can close out 1,300. It's not worth doing at the moment. So there's no point in closing this aggressive drawdown control position, because I could use all of it to just close out one of those trades. I'm looking to do a little bit more and be a bit more aggressive with it than that. So these are great levels to do aggressive drawdown control. However, Friday, and as I said to somebody this morning in Discord who messaged me, Friday was when you should have been employing it. They were asking if now is a good time to do aggressive drawdown control. That was a good time to do aggressive drawdown control. If it does that, that is a good time to do aggressive drawdown control, because the likelihood of that high getting broken if we retest this level, market structure is now bearish. So if we pull back up into here and you haven't got aggressives on, that is where I would add aggressives. And if you want to be overly aggressive, and again, this is something that I do employ every now and again, depending on what the situation is. But when we get up into there, there's nothing wrong with hitting the sell stop button, yeah, and taking another, add more aggressive size into your aggressive drawdown control. Both of these are going to have a stop loss on. So you're just doubling your risk on the aggressive move, but you're also going to bring your average up to here, and a break of that low today will get you out. It's how aggressive you want to be. And again, personal preference. But so Euro odd, we've got no upside to the left resistance. Euro CAD, there is no upside resistance. If you go out to a daily chart, we are at levels which, it's here, are roughly where we started this rally from. But, you know, we're going back here to 2020. This is COVID. Yeah. So this is COVID here. And this is the start of the interest rate rallies, kind of, or the talk of the interest rate rallies anyway. So, you know, these levels are obsolete now. There's not going to be orders sitting there wanting to do anything. So, yeah, we're looking for an unwinding of this leg, basically. So, again, aggressive drawdown control there. That's an aggressive. I've already had one aggressive stop out, hence the loss last week. This aggressive stop above the high, that's not me placing that there. That is just half an ADR, which is what the EA does. It uses half an ADR distancing for its aggressive drawdown control stop losses. So again, reversal alert has just gone in this morning. If we can retest this area here, that is where you can add some aggressive, because it's either going to work or it's not. If it's going to work, you're going to be out very quick. If it's not, you're going to stop out. You've got to accept it. Yeah, if it's not going to work, it is going to hurt. That's it. It's just the way it works. So we've got a break of that high from Thursday already happened today. We've got this little area here from Wednesday, which the market is rebuying Wednesday's high. So if Wednesday's high fails, we're coming down to retest Thursday's low. And Thursday's low is 125 ADR, and that's an exit. There's the average. Yeah, so that's a profitable exit on the trade. Obviously, there's a lot more available. Look at the highs. So whenever you're looking at targets on everything, either look at propulsion gaps or previous highs and previous lows on days. Yeah, this is where the market exhausted. However, there was ambition to buy above that level. When we come back to that level, if the ambition to buy is still there, they will continue to buy. That's where you're going to get your bounces. So when you're looking for exits in profit, look at the areas where the market participants in the opposite direction are going to be, because that's where you need to be getting out of your trades at their entries, which will be your targets. So there's no point in getting out of a trade, for example, here, because there is just parabolic buying. There's no buying or selling or equilibrium balance. There's nothing there. The market's just going to react at where it's reacted at in previous points, because this is where the buy and the sell equilibrium and imbalance is. So watch those levels. This is why the daily highs and lows are plotted on the chart, and the weekly highs and lows are plotted on the chart, because these are the areas that price is reacting at. So watch those on the way down. So again, aggressive down. Obviously, if it goes above, then it's going to be, yeah, Don't know. Something I haven't seen before anyway. Euro Swiss is already underway. Not in that one. So, but again, we've got the 50% retracement on this one. We've had some Swiss franc strength coming in last week. It did bounce here. So again, this is a great example of what I've just been talking about. So this is the previous monthly high. That is the last month's high. Last month's high reacted at the previous month's high. So you've got a double monthly high. We broke that level. We came back down. It bounced, it bounced, it bounced, it bounced, it bounced. And now it's broken back through it. The reason it bounced here is because everybody that bought the breakout added to the breakout, trying to get more profit on a second leg rally. They were overpowered by sellers. So now everybody that was long here is now short here again. So when we get back here, they will add to their shorts. This is where the last batch of buyers broke a high. They also broke a weekly high by accumulating and breaking out here. So when we come down through this level and bounce off of here, we're going to come down and we're going to test this buy area, which was this accumulation break. And then we got this area here, which is where they broke out. So always watch where price has reacted before, because this is where the pivot points are that they're going to buy and sell at. Market moves to the same places over and over again, because this is where the liquidity imbalances are, where market participants are changing direction. Yeah. Doesn't mean it's going to happen. Yeah. Look at this one. It failed. Why did it fail? Because there was not enough buyers that bought this breakout to overpower the sellers that were coming back in their way. Yeah. And that will be because of a number of reasons, because the balance of orders is different, because there's no speculative orders in this last part of the leg, because the Swiss franc has put its interest rates up, because the euro's dropped its interest rates, because Trump said something. Every time you get to a price point, the market conditions now are not the same as back here. Interest rates are different. Inflation figures are different. Unemployment rates are different. Sentiment is different because of what somebody has said. Yeah, but you will usually get a reaction. So if you've got a load of profit when you get there and you see reaction, you've got 50-50 shot of it either working or not. So you're better off just taking the cash, aren't you, in case it's a not. So watch that, watch the levels basically. But euro pound, we have got some decent selling out of the previous propulsion move, which is this high here. So we broke the lows, we resold, and we are reselling again. It is pushing up at the moment a little bit. So, you know, again, this today is the crux, isn't it? Is this reversal holding? So we had the parabolic moves, and then we started to stall out on Thursday. Friday, we managed to put a new leg in, which has broken down on most of these today. So when you're looking at new levels to the upside on this, really 225 ADR monthly high is the next spot. You have got this low here that was, it's not a very clean low. It's that whole area there really, which is this propulsion move. But somewhere around about 125 ADR, which is breaking out above last week's high, is another potential sell point. But there's nothing really clean on this one. Euro pound, in theory, these should both move strongly together. However, obviously this euro with what's gone on, and this is mainly because obviously Europe is involved in the Ukraine a lot more than Britain is, because we're an island. But we're all in it together. So I would imagine this will be much more range bound, and we'll go much more into a balance on this when it all calms down with what's going on with the euro at the minute. But we'll have to wait and see. So, you know, there's a good possibility this may well break out of these highs, but equally, we will be here at some point. It's whether or not we need to go there before we get here. And that is potentially weeks away. So we'll wait and see. But again, sell opportunity coming up on this one for a retest. There's no propulsion gap here really. So this is a 50% pullback right now where we are. Just to quickly check. Russia-US talks are not planned this week. Is cancelling 83% of US aid. I really hope they don't get invaded by Canada and Mexico at the same time, because when they ask for help, we'll say, Sorry, we're busy over here. Um, Richest country in the world, not helping the rest. Anyway, Euro yen, we've talked about already. Euro New Zealand. So there we go. There's the ADR bounce happening now. 5-minute reversal has gone in. So this is the start of the pullback on this leg. Obviously exhaustion, ADR pullback, and then hopefully a continuation to the downside. So if you're looking for those aggressive drawdown control positions on Euro New Zealand and you haven't got them yet, the low of Friday is there. The reversal retest is there. So it's this propulsion gap. So pushing up into the kind of where we closed on Friday is potentially an area you might find some sellers coming in, because we've definitely broken through that level today, or just above it at that propulsion gap would be another good area. So what you're looking for is, where are we going to put in a lower high? So if we're assuming that this is your new high, this is your new low, we're looking for a lower high to form a lower low, probably come and retest 150 ADR, which is just happens to be roughly where my break even is. So yeah, you shorts somewhere up there. But we may find that this selling today just turns into an accumulation and then it continues tomorrow. So we'll just have to wait and see. But we're looking for an unwinding of this level. And again, on this one, you have got nothing to the left to look at. Going back to the daily charts, we're up at this old high, which is this old blip from COVID. Yeah, we're at basically, these are post-COVID highs that we're experiencing here. So this is your COVID anomaly. We're above it. There's nothing to look at. So it's literally a case of timing on this cannot be done using support resistance. It's just done using, you know, whatever you need to use. And at the moment, any kind of reversal alert retest is worth taking an aggressive drawdown control position on. Euro US dollar, same thing. We've got euro pushing again. So we're coming back up and to retest the propulsion move from Asia. So we didn't actually break. So the low of Friday New York session, where we got that reversal in, we put in the lower high today in Asia. That moved down, this propulsion gap here, didn't break that low. It actually held that low, and then they resold it. So this right now where we are, either this is a profit take leg on this and it's going to sell straight away from there. So this candle could easily turn into that in the next half an hour. So we would look for this propulsion gap to hold here. If this propulsion gap doesn't hold, that's potentially trouble. Is this US dollar weakness? Yeah. So this is the US dollar weakening further. Gold will be rallying. So yeah, this is more weakness coming in the US dollar at the minute. So not something that's been said by Trump by the looks of things. Cancelling US aid isn't going to weaken the US dollar because it's saving it money. So it's not to do with that. Just market reaction basically this morning. So this is probably just normal price action. Pounds pairs obviously all starting to roll over as well. So again, if you're in any pound shorts, first of all, you shouldn't be really because it's expensive. But yeah, I mean, that's a lovely M pattern reversal that went in on Friday stroke Monday, and that is a multi-week M pattern potentially to come back down. So you're looking at these areas here for potential bounce points to the downside. Loads of propulsion gaps in this area. So, you know, normal market structure, we're looking for a 50% retracement roughly on a leg. So somewhere, if you put a fib on it, up to here. So this is a 23 retracement on that leg. If you stick a fib on it, that's a 23 pullback. Yeah, there's your 23. So if this new high is basically the M pattern and you extend your fib up to here, you should be easily getting down into this high, which is going to be somewhere between a 38 to a 50% retracement, more likely a 50% retracement. So those are the targets to the downside. I'll be watching if you've got shorts on that one. That's just come out of extension from Friday. Pound CAD, same sort of thing. So this is more of a grindy one. Obviously, the Canadian dollar just destroyed by the Trump announcements. Market structure, obviously, now very much since that double bottom. We're putting a lower high there, but gone. So on the downside, on the way down, you want to watch this high here, and it just happens to be that monthly high from last month as well. And then the previous month's sort of high is there, which is roughly that area there, which is where we bounced here. So this propulsion gap is your obvious downside target if you are shorts. Don't see any reason why we shouldn't really come back and retest that, because it's just mathematically it's all lining up absolutely perfectly with multiple things. So that's your downside target. Obviously, all of this, there's a good example of what we were talking about earlier with an RSI extension, where we just basically didn't really even get a flag there. It was just an accumulation break. So leg 1, no profit take. Leg 2 will be the profit take of both legs combined. Yeah. So it basically, leg 2 will normally undo 100% because it's a 50% of the 2 legs combined. So that's leg 1, that's leg 2. There we go, down to leg, back to where we started on leg 2, which is a 50% retracement of the whole move in itself. So, you know, this is what market structure as a whole is based a lot on Fibonacci, because all Fibonacci is measurements of market structure. And a market structure is just a leg. And a leg either has a profit take or a small pullback before it makes another leg. And this is bullish sentiment, followed by more bullish sentiment, followed by profit taking, followed by whatever the news decides is the next way to go. Yeah, that's all that price does, is it moves and follows the news, follows the market sentiment, follows the fundamentals in waves. What we're doing is we are looking for where the waves are more likely to end. So downside, looking for targets down there. Pound Swiss back inside the range, so failed breakout to the upside. Accumulation back at the previous highs. So this is basically the high point that the market is just not able to trade beyond. We've tried and failed. So downside. That requires the Swiss franc to either strengthen up or the pound to weaken. Can't see any reason really why that should happen unless we suddenly start getting loads of negative figures. Don't forget, pound is one of the few currencies at the moment that is untouched by tariffs. We've got the king, and he loves the king, so he's not going to tax the king. So we're all right. That's how fickle he is. Get an invitation from Buckingham Palace? You're all right. I'm not going to tax you. All these other countries without royalty now are going, damn it, I knew we should have put a king in. But anyway, so not really any reason why we should be going that way, unless obviously Rachel Reeves does something. But Swiss franc definitely could power up on a safe haven run. So it's more likely you're going to see this type of price action, because there's not really any fundamental reason for these two to go either way. So longs more than shorts, because of swaps. Swaps are incredibly expensive on this. So if you do get stuck short on something that goes for a few weeks, it's going to cost you. But anyway, pound New Zealand, again, not trading this at all. Too expensive in both directions at the moment. M pattern reversal just going on this one. So we're looking for a pullback down into that high. This is an old monthly level. Just not really, is it? But that is. So yeah, so we've already bounced at the previous monthly highs. So M pattern reversal is going to break that level, and we're going to likely come down into here. So shorts into that area there. RSI extension, and I mean, obviously it's going to cost to trade it, but there's no RSI entries on that anyway. You would have been in up here. So, I mean, initial entry on this, potentially you could have been on that entire leg on the pound New Zealand. If you'd have got an entry there. If not, you'd have probably been in somewhere around there. So, you know, all this New Zealand and Aussie movement started at the same time as the Euro movement. This is why these moves have been so parabolic on Euro odd, Euro New Zealand, and on these as well. Because the New Zealand dollar and the Aussie dollar collapsed commodity prices when Trump started making these announcements suddenly froze, because import and export is what commodity is all about. And if that was all going to cost more money, you panic and you get out of that sort of stuff. And euro rallied like crazy against them. That's why you get this parabolic move. But they dropped against everything. So again, same move. It's all interlinked. Everything you see is interlinked. This is why exposure is an important thing to keep an eye on, or keep your risk very low if you're going to expose yourself everywhere. Otherwise, obviously in moves like this, you tend to get hurt X amount of more times. So pound New Zealand coming down, looking for that level there. New Zealand dollar CAD. Again, New Zealand CAD is a very, very tricky one. Commodity against commodity. Very hard to call which way either of these is going to go at the moment. Market structure is actually not bad on this. So I had a long on from back there. That's it. Haven't had an entry on this because it's long only for me. Although, to be honest, 590, I'm thinking of expanding this out to something like $6 to $7. Even so, those wouldn't have been entries anyway because we didn't get extended enough. So not really a reason you should be in this. But if you are, I mean, you're probably out on that if you were in it. But this is the area we're testing at the minute. Next stop up here. So RSI extensions up in this area for shorts. New Zealand Swiss, out of the longs last week on this one. Higher high going in, higher low going in at the moment. Difficult to call that. And I mean, it's literally likely to 50% retrace on that. Which way it's going after that, I guess, is as good as mine. So what do you do with that? I mean, we've had the reversal alert. So assume that we're going to retrace 50% of this leg up to 150 ADR roughly. But equally, if this higher low holds, we're potentially going to just go into forming a very wide range here. There's no fundamental reason to do anything different. Really going to come down to what the Swiss franc does. Difficult to call that. New Zealand US got shorts on at the moment, so longs were exited last week. Started a short position on that RSI extension. Second entry taken on Thursday. Next entry will be up at the monthly highs if it gets there. Hopefully it won't. We're going to get some strength coming through in that US. So obviously we put a lower high in and we put a reversal alert in, although this is also a higher low. So we've got basically potential symmetrical triangle formation of contraction here. So if it can contract down into this area, I'll definitely be out because it's going to pop one way or the other, and that's going to be down to what he says about the dollar. So stuck at the minute on that, but in short, and next entry will be up at the highs. Nice and easy. US dollar CAD, out the long on Friday. So that was a nice, quick, easy one in, one out, straight to ADR. Yeah, not really going anywhere. Higher low going in, but I mean, what do you? This is Trump's Canadian dollar tariff announcement. So realistically, that is your old high, which has been respected. That is your old low, which was being respected. Then we came down and formed a new one in that accumulation, that area of balance, which is a previous high. We broke. So this is where the buyers step back in. So at the minute, this is where we're selling, and this is where we're buying, and we're bang in the middle. So it's either going up there or it's going down there. So there's nothing to do. It's stuck in the middle, RSI. It's just a case of sitting and waiting for it to do something. US dollar Swiss longs on at the moment. Fifth long taken on Friday on this. Yeah, US dollar needs some strength, please. We've got a nice low coming up down here at the minute. So ADR today is the next long entry for me, which is this old low going back to the beginning of December. So this is your yearly low from no, sorry, not yearly low from last year, is it? No, not by a long shot. So this will be a double bottom with December low, basically, which is the previous high, which is the previous low. Again, Yeah. Market uses the same price points over and over again. Yeah, 50% retracement leg. So it's a case of, obviously we know that range high is holding. This is where we're going to the downside unless we do a 50% bounce and try and break out of that high. All that's going to happen, we're either going to stay in a range or we're going to get a market structure breakout. One of those two things is going to happen because there is only those two things that can happen. US dollar yen, in propulsion, don't hold up much hope for the yen. For the US dollar against the yen at the minute, yen is just holding well. But again, that's partly due to the economics of what's going on in the US. So there we go. There's all the pairs. Everything's obviously in extreme pain mode at the moment because of what's going on. So we'll see what happens here. We've had the reversal alert on this one. So we're looking for retests, basically. So this high of the day, all of these pairs, we're looking for high of day to hold today. So what we don't want to do today is put in a new high. We want to hold these highs, basically, which means that market structure is definitely starting to go bearish from Friday. And if that is confirmed, you'll see a lot of players entering looking for a down week, which will really help that profit take move underway from the previous 2 weeks worth of bull moves. So we need the market to indicate a bearish stance today on these euros specifically, but we'll see what happens. ORB V3, it's not ORB V3 outro, it's a breakout EA. It's an evolution of ORB3, ORB V2. It's kind of an evolution. And I've been back testing it a lot on everything, and it's fantastic. Yeah, it's finished. It's done for the day today. It's already done. Daily target hit. Where's the date? 10th. Oh, there you go. So it's only got this. It's only got today's trades in there. That's it. So it took 1, 2, 3, 4, 5, 6, 7, 8, 9, and then it closed. 9 trades. Started trading at 10:30. Finished trading at 10:45. Job done. Did that last week as well. There you go. We're up 19,600 this month. Do you want to do that? God, can't operate a mouse this morning. I did yesterday. I have this annual thing I have to do every year, which is called cleaning the patio. We've got a ceramic patio out the back, which is white. Yeah, really lovely, looks beautiful. But in hindsight, buying a white patio, probably not the best idea in the world, is it? Like buying a white car. 90% of the year, it's dirty. So we have this thing every year where we get ever such a slight green tinge come onto it, and I have to jet wash it. And the patio is the entire width of my house, going back half of my garden, third of my garden. So it takes about 4 hours to jet wash it. And if you've ever used a jet washer with one arm for 4 hours, it hurts. So my mouse operation this morning is like, I'm totally uncomfortable non-stop in my right arm because of the jet washing. Okay. So yeah. Afternoon, Lucas. Morning, even. I'm in a squeeze on EuroOdd. Yep. Everybody's in a squeeze on EuroOdd. Well, if you're in EuroOdd, you're in a squeeze on it. So yeah, we've covered this already, but there's your 50% retracement propulsion gap and previous high. So this is the tricky part. So Thursday last week, we had a 3-bar reversal going, and I posted this in the Discord group and said, Friday, I said, we've had this before. Yeah, that's where it looked like we were going. So when you have a reversal kickstart a move, it tends to be exhaustion. New trends tend to finish with exhaustion. You don't often find a trend does this and then has a massive bull candle, and then just sits around like this and then starts to come down. It usually has exhaustion and then it comes down. And this is basically the buyers squeezing the market price to try and find sellers and finding none. So eventually you just get the market very quickly reverse because there's nobody left up here. So you think about it, you running at someone with a tray full of drinks, basically you trip over at this point and the drinks go flying and you've got to go back to the bar. It's a good analogy, isn't it? But that's basically what you tend to get. And it usually ends with a 3-bar reversal or a hammer or a shooting star, depending which way it is. So it looked like Thursday was the day. And what actually happened was Friday, we had another rally. And then we put in another 3-bar reversal and a strong reversal 50% of the day. And then today we have started with a downward leg. So this is much more indicative of a reversal than this day because there was no exhaustion here. This, if this undoes it in 24 hours, is exhaustion over 2 days. And if that is the case, we've got to break this level. And as soon as this accumulation, which is where that last batch of buyers went in, is confirmed as not being buyers, that's it. We're off. We'll be gone. We'll be down ADR to ADR within 24 hours. But we need confirmation. It's got to happen. We need the sellers that have started this second leg today to really stick the hammer down, basically. I've learned a lot from this squeeze on the euro. The first major one I've been in since we started position trading. Yeah, so the main lesson everybody is going to learn here is the lesson that I teach in the bootcamp, which is exposure. If you are short on 1 euro pair or 2 euro pairs, you're sitting there going, this is uncomfortable. If you're short on 1, 2, 3, 4, 5 euro pairs, you're sitting there thinking, holy crap, this is painful. Difference between comfort and pain is exposure. Yeah. So there is no right or wrong. Again, exposure is exposure. If you are exposed 5 times on something, it's going to be 5 times more painful when that particular currency is squeezed. If you drop your risk to, as I have, 1/3 of normal risk, and you take 4 or 5 pairs still, you're still going to be in more pain than uncomfort. Yeah. So if you really want to be safe, limit your exposure. Yeah. The other thing that you should take away from this as well, which I've talked about a lot, and I don't talk about enough in the bootcamp, is the comparison between the Australian dollar and the New Zealand dollar, and how they move together. I've talked loads and loads in the live room. When I'm talking about news specifically, I say we've got Aussie dollar news coming up on Wednesday morning. We've got the interest rate being announced, so look for big strong moves in the Aussie and New Zealand. Not in the Aussie, in the Aussie and New Zealand. They are trade partners. As far as the world is concerned, those two are batched together. So when the Aussie rallies, the New Zealand rallies with it, unless there is a reason why one shouldn't, i.e. something that they sell to each other is changing, some relationship between them. But if you short the Euro odd and you short the Euro New Zealand, and the Euro pops and the Aussie drops at the same time, the New Zealand drops at the same time, so you've in effect got Forex exposure there. You've got 2 euros long, and you've actually got 2 Australasian pairs. What we should really not talk about is the Aussie and the New Zealand. We should talk about the Australasian pairs because they do move together. They're both commodity pairs, so they are both affected by commodity movements. The CAD is a commodity pair, oil. It's affected by these are mineral import export. This is oil import export. Yeah. So commodity pairs are affected when commodity prices change. When oil is constricted, the Aussie and New Zealand will also be affected. The commodities market will be affected as a whole. We've had a flurry of activity with what Trump has done in all markets. Stock market emptying out, needing somewhere for that stock money to go. Commodities emptying out, needing somewhere for that commodity money to go. Where are you going to put it? You can't put it in the US dollar because the stock market's collapsing, which is going to drive, at the moment, the US dollar down. Where do you put it? Well, there's nowhere much left, is there? Where's the safest place? The pound or the euro? If you're not going to put it into the safe havens of the Swiss and the yen, which did benefit short term from it. So, everything is interlinked, and this is why exposure is key. Because if you are overexposing yourself, and this only is for swing and position trading, if you're intraday trading, it doesn't make a difference because you're out by the end of the day, aren't you? It's relevant. None of this that I'm doing on this account here or this account here gives a monkeys about anything to do with exposure, really, because I'm in and out in a day. The euro odd can pop while the euro New Zealand is dropping because the New Zealand is moving independent of the Australian dollar for an hour, but they both move in line for the day. But for that hour, I can trade in either direction. So it only really affects you when you're looking long-term movement. But that, this is showing you what happens when you are overexposed, and it hurts. But CAD is getting this US dollar at the minute and the Canadian dollar really weakening. But again, these are all we're looking for. We really want these US pairs to hold the lows of Friday as well. Just have to wait and see what happens. I've learned a lot. Remember the query I had on the SIH, time-based ranges? Time-based ranges, yeah, sort of. So I set percentage of ADR to 0.01 and 1, and the EA rightly takes the smallest candle in the look-back period and hedges immediately. In future, would it be possible to get the option for a pure time-based range without percentage of ADR? No, because that's not what it does. You could have that, Mumo, but not on the SIH because it's nothing to do with the strategy. This EA here is doing pretty much exactly that. This EA let me just drop the risk down. I'll just let it start trading again in 5 minutes. I'll see that on a minute chart for a minute. I won't actually because I don't want it to trade minute charts. There we go. So it's back on. So what this EA is doing is basically looking for ranges based on ADR, not time. Oh yeah, you want a time-based one? No, not with SIH. No, you need your own made, Mumo. I think you need to make your own EA. Or get someone to make your own EA for you because you want to do something different to what that does, and it doesn't do that. You can't have an EA that pleases everybody. It's not. It's not something I want to do. So that product is not the right way to do it because it's everyone like me who's happy using this at the moment, making lots of nice money with it, doesn't want it changed. Look at it. Doing well. I would do tests on the S&P 500. Yeah, use that set file. Can a weak chemical wash use a weak chemical wash? Much easier. Also, jet washer can affect the patio surface glaze. Don't know. I can't use chemicals. Got a dog. But I was told basically to use vinegar. So once you've done your cleaning, put a vinegar coating on the top And I said to the guy that, because I had a guy that came in and did professional cleaning of our old patio before I had the new patio put in. And he said basically that is the best thing to do because it keeps the fungal growth back, the vinegar. But I did say to him immediately, so what happens if it rains? And he's like, well, it soaks into the paving, basically. So I said, but what if you've got ceramic glazed tiles? And he was like, yeah, that probably wouldn't work. So obviously I've got ceramic glazed tiles. So what I did was not only buy the worst color possible, white, I also got ceramic glazed ones, untreatable. They do look very nice, but they are not practical at all, especially when you've got a dog. So as soon as it rains, goes in the garden, muddy paws, straight across the white, and we just give up. Wait for it to rain. Can't clean it every day. Just not possible. Right, that's me done for today. So I'm basically working on other EAs at the minute, which I'm the ORB V2, this new variation of opening range breakout. What I'm going to do, I think, is the current ORB EA, which is here. Would have asked for a hedging feature on the ORB. It's the SAH. If you want to write a specification, Mumo, of exactly how you want an EA to work, right, I might be able to build it for you. Because I've got a lot of code to do with range breakouts, etc., built in multiple variations of multiple ORB EAs that I have or haven't have developed and launched, or have in development and sitting there, or new ones. So I've got a lot of different variations. So if you want to write I want a proper specification written out of how it got to work, I might be able to build you something. And if I test it and it works and you're onto something, it'll become a product and it'll be like, yes, this is the Mumo ORB. But I have tested the opening range breakout strategy for a long time in a lot of different ways. And I've learned that it doesn't matter what you put in it, there will be an Achilles heel somewhere. So if I was to build into this whatever you want, it will open up another wound. When you're doing EA development, what you end up doing is you go, oh, it's brilliant, but then that happens. So how can we stop that happening? And you go, well, if I didn't do that, when we did that, then that wouldn't happen. So you go, oh, that's brilliant. So what happens is it does that. Excellent. Then it does that. But why did it do that? Well, it did that because we put that thing in. So if we remove that thing, that happens. And if we put that thing in, that happens, but then that happens. So how can we stop that happening? And then you patch that, and then it creates a leak. Think of it like a bucket of water that's leaking out of that hole. As soon as you patch that hole, the pressure makes another hole pop. Yeah, and then you patch that hole, and it makes another hole pop. And then you patch that hole, and then a hole pops out the side. And then you patch that one, and a hole pops out there. That's EA development, strategy development. If there was a way to stop this bucket leaking, I wouldn't tell you, because I would print money and be a multi-billionaire. There is no way to have a foolproof strategy. And I think what you're trying to do is continuously patch something that is unpatchable, because you will break something else by patching it. Yeah. So on the days where I know kind of what you might be trying to do here. So when you get an SAH break, yeah, and a hedge, what you're trying to do is target an aggressive hedge exit here. Yeah. Doesn't work out. It does this. Yeah. So what you're trying to do is go, okay, I'll re-hedge, but then it will do that. And if you hadn't re-hedged it, it would have hit target and you'd be out with a lovely profit. But because you re-hedged it, when it pushes up to there, you lock in twice as much loss. You've patched that hole, which is the what if that happens, but you've created a new hole. What if that happens? The market is binary. Every time you patch a hole that stops something happening, you alter the course of price action doing the opposite thing, which either creates more loss or creates more profit. It's like the Marvel universe. Yeah. Every time you do something, you create multiple timelines. Along every single one of these timelines, when you make a decision, you create another branch, because it can only do two things. Every decision made, which is either a trailing stop, a stop loss, a partial profit, a full close, creates a new branch. Yeah, you cannot stop branches growing. Yeah, if you could, someone would have just developed an EA that just makes a line like this. There's a problem with that line somewhere. There's always a problem with that line, which is why there is no P&L that looks like that. And if you see a P&L that looks like that, run, because they just haven't found that yet. And that is coming. Martingale. First time you discover Martingale, you're like, this is how they do it. And you're like, look at this. Look. Oh, what happened there? It lost 12 trades in a row, but in my backtest, it never lost more than 10. That's because you didn't backtest properly. Oh, well, I'll tell you what, then we'll just make it 15. Oh, it hit 15. It's never hit 12 before. How did it hit 15? It's going to do something different every time, because every day is different. Therefore, you're never going to get the same results in the backtest. But it can show you what's best to do, but it's always going to make something else worse. But it doesn't stop you building it. You've got to use something. This is the thing. I get asked all the time, and I can't answer the question, what's the best thing to use? Is it the ORB or the SIH? I don't know. What's it going to do today? Is it going to go straight down to 5R, bounce and come back half? Then it's SIH. If it's going to have a choppy open. If it's not going to have a choppy open, use the ORB. And is the range 5, 10 or 15 minutes that we need to take today? It's one of them. I don't know which, though. I can't tell you because I don't know. But I have to make a decision. And you act on the decision of what you've done. So that's the best I can give you. But I'm happy to build or try and build something. But I don't think you'll fix your problem. This is why system hopping exists. Yeah, this is the whole premise of system hopping. Everybody's trying to find the holy grail. Yeah, that chalice of strategy. Yeah, that doesn't exist. This is the strategy that has no stop loss, that never loses and creates an equity curve like that. It's out there somewhere because I see people on YouTube making money all day long. I look at Lee and look at the 31% he's made in the last 5 days with the SIH strategy and think that's the holy grail. Then all of a sudden it puts in a $4,000 loss week. Oh, I'll move on to a different strategy because that one doesn't work. It does work. It also has bad weeks. But I can't fix that because the market is unique every day. If it goes like that at the open, it isn't going to make money. When it goes like this at the open, you can't help but make money. It's done ADR. You've hit 5R target. You've just had a beautiful, huge, profitable day. If you'd have set your bloody clocks to the right time. But, you know, in backtesting, I didn't do this. In backtesting, it automatically did the clocks for me. Well, it didn't actually because it doesn't do that. But do you see what I mean? What I did today is create a new branch in my timeline. The day that I didn't make 7% because I didn't get a double clean break. That's today. Go back, rewind to me getting up an hour earlier this morning, opening my charts up and looking at my pre-market ranges being in the wrong place, which should have been there. I would have gone, hang on a minute, why is that wrong? Oh, the clocks have changed. Hang on a minute, let me quickly adjust this so that it's right for the live stream. As it happens, I got up late. I didn't have time to do that this morning. My timeline has changed. But I can't create a strategy to fix this problem. It's just happened. It's different to what it was or what it could have been. Yeah, or you're just trying to patch stuff all the time. Not you specifically. I'm just saying that's what we do as human beings. We always want perfection. We always want to fix it, want to make it better. You can't get perfection in this because it's not a perfect market. It's an imperfect binary movement that you cannot predict. So you just have to do something. Pick one, do it, backtest it, make sure it's got an edge, roll it out and accept the fate. Sometimes the fate is going to be horrible. You're going to get a month where it's going to hemorrhage 50% of last month's profit. Nothing you can do about it. If it didn't happen in backtesting, it did this time. That's it. Accept it. You just got to get on with it. It's horrible, but it is what it is. And that's the problem. This is why everybody gives up, because everyone's looking for that and it doesn't exist. If it exists, find it and tell me about it, because I'll snap your arm off and we'll all be multi-billionaires together. But so far, in my 18 years or so, 17 years doing this, no one's managed to come forward with that strategy. And I've tried them all. There's very little anyone can come to me with that I haven't seen before. They might have a new name on it, or it might have a new arrow on it, but I can tell you exactly what it is and why it doesn't work, because I've seen it. And there's only a couple of things you can do. Every single mean reversion somebody comes to me with is based on an oscillator or a Bollinger Band. No one's come to me with a mean reversion strategy that it doesn't use those two things, because that's what mean reversion traders use. And if you've got something that you use that is not based on those, and it paints an arrow on your chart, I can guarantee that the mechanics underneath it and the logic is drawing that arrow based on a Bollinger Band or an oscillator. It might draw an arrow and you go, no, it hasn't got an oscillator. Underneath the hood, if you look at the code, there is one. Because that is how mean reversion works. You cannot mean revert something that hasn't moved. You measure movement using oscillation. Breakouts, mean reversion, trend. There's only 3 strategies that exist. There's 1,000 different courses you can buy on those 3 concepts, but there are only 3 concepts. Binary markets, 3 strategies. I haven't found anything else, but if you do, please let me know, because I'm getting old and I'd love to be able to sit on a beach, drink Mai Tais and just print money. I can't. It would be lovely. This US dollar is coming down again today. As long as the Australian dollar and the New Zealand dollar are slightly strong today, I think we might have a good chance of a reversal kicking in, but we'll see. Right, back tomorrow with a member stream. Yeah, we'll basically, I haven't got anything planned for tomorrow specifically. And again, I'm struggling to get stuff done at the minute, especially with what's going on. So if there's anything you want to cover in the member streams, let me know. We've kind of done the S&P test, haven't we? That's a point. I think I've just remembered something. Bear with me 1 second. Was it this day? Was it Tuesday we looked at this? Because I forgot to put a title on this. Live in 21 hours. No, sorry, not that one. This one. Do you remember when we looked at it? Yes, it was. It was Tuesday, wasn't it? Yeah, 8%. There we go. Right. Let me just quickly edit this video, because I couldn't remember what we did on Tuesday, and I remembered I left this blank. S&P 500 pullback strategy with position trader EA. Save. Done. There we go. So that's the video. Was check. That's the one to go and look at. Now I need to get to my channel. There we go. So I've got that labeled now. I suddenly, because I saw that video this morning, and I was like, because I always put what the stream is about, and I completely forgot to do it. There we go. Right, so yeah, so we're back tomorrow, obviously, for the next member stream, but I've got nothing particularly planned at the moment. So if there's anything you want to cover, let me know. Other than that, we'll just be doing the usual stuff. I don't want to do much more on the ORB V2 because I've done it to death, but I do want to try and get this finished. So I might look at the current ORB. So what I might do tomorrow is actually some work with you in the member stream. I want to look at the opening range breakout EA that I currently have and how the exact logic, because I don't use that one anymore. I use a new variation of it, which I've got, and I use the SIH. So I want to look at the ORB V1. I want to compare it with the ORB V2, look at the differences between the two, and basically I want to replace this completely with this. So I need to make sure anybody using this has got the functionality they need in it built into here. So that's kind of, I think, what I might use tomorrow to do. So I can go through the logic of why all the logic exists. Go through the logic of the logic. Go through why the logic exists in here and what it does and what this one does compared to that one. And then we can basically put together a list of stuff I can finish this off with and get the bloody thing out. So I'm going to update this. I don't want to release a new product. I want to replace this. I want to have this as a usable thing that I want to use, basically. So, and it's obviously running here and it's doing phenomenally well. But obviously the market is, volatile at the moment. The VIX is off the charts, isn't it? Oh, that's what I was going to do quickly before I go. I just want to look at Bitcoin. Because we were talking about it last week. It hasn't gone anywhere. Okay. So this Bitcoin collapse isn't really a collapse, is it? It's a pullback. Yeah, so everyone was panicking here because it dropped for 3 days and the memes all started. And everyone was like, the world's going to collapse. And what we ended up doing was a 3-bar reversal rally, 100% retracement. But it has, again, come down all the way back down. This is a daily chart. And we've gapped down today. So got a gap fill if you want to buy the Bitcoin today. Yeah, okay. Because I was looking at basically that. But it didn't happen. So there we go. So I put it on my list of things to talk about today and I completely forgot. So there we go. Don't need to talk about it because it's not happening. Right, I'll be back tomorrow. If you're not around tomorrow, I'll be back on Wednesday afternoon. We'll be trading the NASDAQ, S&P, etc. Obviously, ORBs this afternoon, trade as normal. There's no news today. Nothing to do. Change your times. Other than that, I'll be back tomorrow. And if not, I'll be back Wednesday afternoon and we will do an analysis of what's happened in CPI and the Canadian rates because they will have all happened. And then obviously we'll see whether it's worth trading the markets on Wednesday afternoon. All right, have a good one. Anything you need, let me know in Discord. Other than that, I'll see you next time. Have a good day.